So, welcome everyone to our trade week forecast call. If you could please, the Q&A box is open and ready for questions throughout this call. I know we had some technical difficulties on Tuesday. Feel free to post your questions in there. I will try and get to them to the end of our discussion today, which is all going to be about risk management and drawdown. So again, welcome. For those just joining us, my name is Steve Vetterl. I'm Auvoria Prime's CMA, your risk manager. Also, if you could please, let's do a quick test to make sure everybody can see my screen. So let me double check the sharing component. Should be seeing the risk disclosure. Okay, so a lot went on last week, to say the least. A lot went on in the equity markets. We saw a continued lifting of most global equity markets due to central banks. Continued supporting efforts via quantitative easing, which is nothing more than dropping money into the markets and supporting liquidity. Also keep in mind that towards the end of the presentation today, we've got a number of accounts hooked up, including mine, to both FX Blue and MyFXBook. So these are the two verified trading stats websites that you'll see me beginning to explain how to understand the stats of how both Alexander and Einstein are trading. It's a great way to measure risk management techniques, both win, loss, drawdowns, gains, all that fun stuff. So let's go through a quick compliance and a slightly expanded compliance this week. Keep in mind the trading foreign exchange market carries high risk and may not be suitable for all investors. So as my suggestion, put a risk and trade plan together. That way you will minimize volatility and the aggressive components of setting up a lot of the software to trade outside the default settings that come out of the box. And hopefully that will avoid blowing your account out. Also on a compliance front, do keep in mind for everybody up and down line, if you are sharing any of your results from Alexander or our new software Iris, which is fantastic, or Einstein, please do not use the term company recommended settings, okay? So Auvoria Prime does not have any recommended settings. Those are just coming from me. They're not a financial advisory firm. They strictly license software, and then users use the software at their own risk or their own settings discretion. So the software does come with default settings upon initial setup, which our users have the ability to customize. And I think this is where people are getting into trouble in accounts that are smaller in size, that are maybe trading more than one currency pair, which is what we recommend and I'll talk about, or two. This is where we're seeing some of the drawdowns last week. So, you know, and the other thing on compliance before I go to the next screen is that AP really has nothing to do with the customer's broker account, okay? We do not solicit or take investments. We don't recommend any brokers, nor do I. I really can't. That is for the folks in your upline and downline. There's a lot of good Forex brokers all over the world. There's a vast majority of them are junk, but there's a whole bunch of good ones as well that in some cases just take commissions off the trading instead of betting against you. Ask your upper and downline folks for those recommendations. So I like the new tagline that was released last week by one of the groups, TradeWise. And that tagline is trading safely equals happy trading, okay? So for those of you that are new and do not know who I am, I do the forecast calls on Saturday and Tuesday. I try to act as your risk manager and hopefully keep everybody on track so that we are all happy and making money. So this is just a little bit about my roles. So I'm really here to make sure that all of us are staying on the same risk management page. So a few people at the top of this organization spent considerable time going over some of the accounts that were in drawdown over this past week. And I thought a couple of maybe thoughts in the beginning to keep in the forefront of your mind. Very simply, I come from a more aggressive type of space. In a former life, I ran a long short hedge fund. And 1% a week in performance for us would have been astronomical. So you need to help equip yourself to accurately understand that the name of the game in Forex is not maximizing gains. It's equipping your accounts with appropriate risk management settings to be able to withstand the inherent volatility that is just part of Forex. It's not really about maximizing gains each week. It's about minimizing the risk or protecting the gains that the software has already attained for you. So whether you're using Alexander manual trade alerts or if you're using Einstein where it's trading for you, same settings should apply, especially for those that are inexperienced before you go to a live account, essentially, and start trading more than one currency pair, especially if you have a smaller account. So let's talk a little bit about that. And again, I'll show for those who just joined us, I'm going to show towards the end as everybody sticks around, maybe take a poll if I have some time, take some Q&A. Obviously, that's important. But I also want to make sure that we get a chance to go through some of the FX Blue accounts that I have and the My FX book showing just performance, helping you kind of dissect what's most important. There's a lot of stats you see on this page, but really the important thing to pay attention to with any trading system, whether it's manual trading, which I often refer to as discretionary, or if it's automated trading, is just looking to see what the statistics are. How has the win rate been? Okay. One thing to note also, I had the pleasure this week of being on a call and doing a really deep dive with Daisy Duncan and her Forex Basics course. It is an excellent course. You will find going forward some of the answers to my questions that you ask are going to be, did you go through the basics course? Doesn't take that much time. It's in quick hit format. It's exceptionally well written and presented. It is very easy to understand. So I would highly suggest that everybody go through this course, Forex. And heck, I even learned a few things by going through this course. There's some nuggets that even I was able to pull out about it that I'd either forgotten about or I just flat out didn't know. So go to the next screen. Hopefully everybody can see this. This is today's topic, risk and drawdown management. This is posted in the back office of Auvoria Prime every week when I do my text or commentary version of this call, which will be posted along with a recording of this video tomorrow. But the key thing really that we saw last week is that the default starting lot size that you see right here of 0.01 per 3,000 was an incorrect. It was wrong on a lot of accounts actually. So I thought a review of what we post and sort of our core principles of understanding lot size as it relates to the size of the value of a large account. Okay, so I personally do not recommend starting a live account with anything less than $1,000. Okay, because we cannot go any smaller than a 0.01 lot size, right? And if you have a $2,000 balance, still the argument can be, from my perspective, until you understand how it's doing, you may even want to start off with one pair trading 0.01 as well, which is even more conservative. And I know what a lot of people are saying. Well, hey, that's great, Steve, and all, but guess what? If I have a 1% week, or this doesn't really make me a lot of money. Well, that's true. But as I often teach, and I had the luxury this week of also speaking with a couple of European traders along with myself that had been studying Einstein, Alexander, and the previous versions of the software over almost the last year, and the consistency of conservative settings versus something aggressive or going outside of the box still yielded great results over a longer period of time. We have a larger data set to show you today about that. So I still think that it boils down to, with a $2,000 account balance starting, I would probably be two pairs with a 0.01 starting lot size. You could even make the argument that you're trading one pair with the 0.01. Maybe that seems too conservative. You can always change that as it progresses, as your experience level grows. As you say things like, hey, I made it all the way through Daisy Duncan's Forex Basics course, and I understand this better. So as you gain an understanding, it builds confidence that you're willing to maybe step out. But just do understand that there will be weeks that are losing, as a lot of funds that trade in great size in this country and around the world in hedge fund land, which is more aggressive space in this, many of them have entire months where they're down. Some of them will finish the entire year down. Now, I know a lot of people will say, well, I don't have the ability to tolerate that. Now, you may not, and you may want to just save up more money and do live trading down the road and run a demo account for now. But really, the important thing is to understand that over the long term, which I'll show you towards the end of the call, money can be made, and this software needs to be granted a wider net in order for it to operate. In the previous versions of the software, we had much larger drawdowns than some experienced last week. But you know what? They gave it time in many cases. Software came back. And it came back and pulled itself out of a pretty deep hole. And that's the beauty of its ability for higher win rates over the long term. Maybe a little tough to stomach in the short term. So just trying to cast some light upon this area. I know that this may seem quite redundant for a lot of the experts on this call, but I still think if you can pull some nuggets out this and pass it on to your team, keep it in compliance. Obviously, we don't want anybody of our regulators out there making a career for themselves after chasing down something that went wrong compliance-wise within our group. So, and you can see for a 3,000 bounce, 3 pairs with a 0.01 starting lot. So let's break down the pairs, okay? So, by the way, apart from what else do I want to note on here? Yeah, so these are the default settings that you see. Let's go to the next page. I would start with the Euro US dollar, okay? Anything attached to the yen typically has more volatility associated with it, okay? So with more volatility associated with, especially if you don't understand how this type of Forex market operates, which I think is key to feeling more comfortable, obviously in the long term, more comfortable putting more money at work, things like that. I would start with the Euro US dollar. So for anything that's larger, and again, this is posted in the back office because I'm seeing a couple of questions. This is in the back office, folks. And, as I often joke with my students, if you don't understand something, watch this recording over and over and over until you get it. But for larger accounts, I would probably be the ring, if you will, which is the Euro US dollar, the US dollar JPY Forex pair, and the Euro JPY, which sort of like completes the ring of the largest 3. The Euro US dollar is typically the most liquid. It is the most liquid in futures land as well, with the 6E, which trades on the Chicago Mercantile Exchange, which is more of an aggregated exchange, just like equities are trading on the New York Stock Exchange, NASDAQ, or DAX in Europe, something like that. But that's just a little bit about account balance and currency pairs. Most of the problems in drawdown that we saw last week came from things like, oh, well, hey, I was told by, Johnny in my upline to have a 0.03 starting lot size and 2 pairs in $1,000 account. So, I mean, hey, if you can afford it and you feel comfortable with that higher level of risk, I'd say, hey, by all means, go for it. But if you don't think you have the stomach to put up with that type of volatility, there's nothing wrong with starting off smaller, guys, right? I mean, the biggest problem I've seen in this entire trading industry is ego. And a lot of people come in and say, I got this stuff, or I know what I'm doing. And I've seen CEOs come in and set up a futures account with $500,000, come to me for trading expertise. We set them up. They don't listen to anything we taught them. They go in and think they know everything, and they're God's gift to trading, and they wind up blowing up a $500,000 futures account. I've seen it happen. And, the market's goal, as I often joke, and a lot of people just don't understand this, that's okay. But the market's goal essentially is to bankrupt you. It is to take as much from you as it can. So if you constantly have that in the back of your mind all the time, it's going to force you to be into a risk management mode, right? So enough about that. So we are 16 after the hour. Let's open up to take some questions here. And while you guys are posting questions, I want to go through and set up our other screen. All right, so let me switch over here. Good questions so far, guys. Keep them coming. By the way, I love the participation rate this weekend. So as I heeded the warnings last week, thank you very much, and appreciate everybody attending. So let me screen share here over. Okay. So if somebody could just let me know, are we seeing my Einstein screen? You just put a quick yes or so in the Q&A box. Make sure we're sharing that okay. Okay, good, thanks. All right. What do I want to talk about first? So first thing I think we should probably address, just looking through some of the questions here. I had Einstein turned off on Monday, Tuesday, and Wednesday. Or I should say part of Wednesday. I turned it back on, and it squeaked out a 1% performance for the week. So I just saw some craziness inside the market that I didn't like, which mostly is just complex patterns that were falling apart, lots of volatility, yen related due to news, obviously no surprise. Japanese central banks doing all kinds of crazy things, and that's making obviously their currency go bananas. So I turned it off. So I turned it back on, which I, maybe need some sort of like alert system outside of Telegram, which by the way, everybody should completely be on Telegram. If you're not, I would highly suggest downloading the app to your phone, joining the relevant groups like TradeWise, certainly Auvoria Prime Master Channel, which is corporate's news release channel. It's actually really good. So essentially, this is the week's performance. Notice the settings are the same. Nothing's changed. Albeit, I got to tell you, this week, so you're going to throw a monkey wrench out there. People are probably going to be like, oh no, what's Steve doing to us now? I actually saw some pretty solid evidence from a full year of this trading, almost 25 currency pairs with just basic default settings. I saw a strong argument for a potential change in the range multiplier and the position size multiplier to actually reduce volatility. So I'm not going to release what those settings are. Please don't ask me what that is, because I don't have definitive data to make a decent hypothesis at this point. But I'm building one for the future, and it may entail me changing my range multiplier and position size multiplier settings. So just stay tuned on that. I'll just leave that as our teaser to come back next week for the presentation. But so essentially, this is the Euro US dollar here. These are the basic settings. We talked last week about the trailing equity. Notice you can always double click on the trading equity and change it to fixed weekly goal, which I'm not going to do right here. If you want to see the entire discussion surrounding that, please watch last week's call. But these are the basic settings. For those that are in drawdown in a given week, and this may not sound like a great actionable plan, but just going back over the last week and looking at long-term data over how this software acted when it was in drawdown, for somebody that was in a 10 or a 15% drawdown that was using basic settings, yes, some of those trades came back a little bit on Thursday, which just does nothing but edify my statement of I would just cast this software a wider net. And if you're genuinely concerned about a 10 or 15% drawdown, you probably have too much money in the account, or you haven't built the tolerance up yet for the volatility. Okay. So I would say take some money out of it, or switch it over, or turn the trading system off if you're on live, you don't understand it. Set up a demo if you haven't already. Watch how the demo operates. With the demo, I would always have a demo running, as you will always see with me a demo running with the standard settings. I may make the change to the range multiplier and the position size multiplier, but I'm not going to change the trailing equity start. I'm going to leave it at 2%. We keep the trail by at 1. We prefer to have the software close out at 10 a.m. Eastern time Thursday morning and avoid all the volatility, which actually did a little bit of advantage to the yen this last week by levitating it a little bit from some of those trades. But normally that's not the case. The win rates are usually pretty poor on Thursdays and Fridays. So sorry if I talk fast. I got a lot of stuff to get through here in a short period of time. Yes, I have a golf date here in about 45 minutes. So looking at, let's take a look actually at my account first. So for those of you that have never seen this, this is called FX Blue. FX Blue and My FX Book are two websites where you can go in and it's kind of a complex process where we've actually shot a video on that we're going to release in order to be able to hook these up. But I think this is just core to having, whether it's your business with Auvoria or you want the software to trade a whole bunch of live accounts, you've got to hook these up to these two sites. We don't get any money from these sites. We have nothing in terms of referral. These are just two that we found that are solid, that you can't mess with. And essentially it's just verified and track records. So you can actually, I really wish that this existed 10 years ago when we had our long short fund trading equities and futures. This would have been great to hook up to see live trades and have a real-time update. But in any case, this particular one, if you look up in the left-hand corner, it's up about 127%. This is over a long period of time. Note that with me, the only thing I really care about, and you can dice this stuff 6 ways to Sunday, the only thing I care about is a large data set and the percentage win rates, long and short. Okay, long and short just means you're betting against upside. Long, short, you're betting against the downside. Okay, and also for those, just as a side note to sort of build a bridge, if you will, one of the great things that Daisy Duncan and her team have decided to do is to build a couple of additional courses in that will bridge maybe some of the confusion that I teach at a higher level down to more understandable levels. Just understand that's to follow. But with me, it all boils down to the large data set and the percentage of win. Okay, so let's go back to my account and let's look at the same thing. So the account's been running for 26 days. You could see the currencies it's trading. Notice most of the trades that it's taken has been the euro US dollar. Okay. And let's also look to see there's 2% weekly return. I think I got a little lucky on that because I turned it off when some of these trades went against us in the yen. But essentially, just like I said, about a month ago, not a lot of data. Really 26 days is nothing in terms of data. It's nothing to brag about in terms of performance or returns. But I think it's important to. The other cool thing is you can go in if you really want to do a deeper dive. You can actually look at all of the orders that took place over like an open order or any closed orders. So let me take a look at these questions here. Bear with me a second. Right. Okay. One of the questions, and thank you for reminding me, let me jump back into the software. So right here is the equity protector. Okay. So with the equity protector set at 60%, you can play around and change the setting to whatever you want. But I would suggest keeping it somewhere in this area. Yes, if the equity protector is at 60%, that means you're risking a 40% loss in your account before it turns off. Okay. So if you want, you certainly can switch it to, like 80. I still think the problem with 80 is if you get into a drawdown where the software is adding successively larger trades as you get more deep into the red to sort of pull itself out quickly, which has had a fantastic aptitude in being able to do over the last year, you risk closing the account out at the bottom. So that's why we've kind of agreed at a 60 or 70% equity protector, essentially casting a little bit of a broader range to allow the software to pull down. Okay, so a number of these questions that you guys are asking, it's apparent a lot of you have not been through the Forex Basics course. So Ryan, I can't recommend a broker. Sorry. I could feel we could find a template for risk and trade plan. So the template, Hernan, for the risk and trade plan is posted in the back office of Auvoria. So each week when I do, my notes on what happened in the market, forecasts, look back for, just general tangential that I have a tendency to go on, it's all in the back office. Next question is, can we get a rundown for lot sizes of accounts greater than 10K, 20K, 100K? As time goes on, though, people exponentially increasing the accounts if we could get a chart of some sort. So let me just shift back to the slide to answer this question. Really, at that point, I don't know. So we're back at the account balance and currency pair screen. So it says at the bottom, for 10,000 balance, 3 currency pairs. I have no problem with just keeping that. You could even increase for like a $20,000 account. And again, it still boils down to how important is that 20 grand to you. If it is a smaller number in a much larger portfolio, then you have more latitude as far as risk that you can put on. But I would still stick with the 3 currency pairs. I wouldn't get any heavier than about 0.03. Let's take a look at some other questions here. All right, I guess there's some good questions here. What to do in life is shoes drawn. I don't know how to answer that question, Reiko. What is the detail of the risk of trading 3 pairs? Okay, so we've gone through that. A lot of these questions are all related to the stuff that's in the back office, guys. So you want to refer to that. What was your second choice for running a single chart? Tough question. It would have to be the US dollar JPY. So the other thing I'm going to comment on, which is going to throw some monkey wrenches in this discussion, is we've seen some really good results from a couple of pairs linked up with the British pound. But I'm not going to bring that into the discussion yet, so I have some definitive data. Remember, everything with me, guys, it's all about the data, right? I mean, thank God I got a finance degree from Xavier University because I've used every piece of it doing this type of analysis. But it's important to me to see a large data set before I let something go. Next question is, I have seen the software go into a great profit, but it didn't exit the trade. It subsequently went into a deep drawdown before it came back up to only make a few pounds profit. Would you ever recommend exiting a trade manually? Again, this gets back to just risk management, right? So if you're in a live account that you're speaking of, and this is money that you can afford to lose or risk, then I would cast a broad net and allow the software to do its work. Again, if I was to go in, and I know compliance-wise, this probably isn't the smartest thing because I don't want people talking about previous iterations of this software, but I've seen it operate over the last year, and I've seen it go into drawdown, and I've seen it pull itself out every time. It just took some time. So in some cases, it took a month, but the whole account drew back out of that, okay? So don't hate me, Mariska, but I think it's important for people to understand we got to focus on the long term here, because the problem with a lot of these questions is they are way too myopic. We're focusing too much on the short term. And, I get it. You want to work out the parameters, you want to understand, but I still think that, if you have not built a trade plan, now is your opportunity to do so. Why do you do start hour 23? So let's talk about that. Okay, so at the bottom of the screen, let me shift over to sharing. Go back to Einstein's screen where the settings are. Start hour, Sunday, hour 23. Ideally, you want the software to start out within 1 to 2 hours of the market opening. I don't want this software, just like in the futures markets. I will never take a trade Sunday night. CME in Chicago opens up essentially Sunday afternoon, just like Forex does, for Monday-based trading. I don't want to trade the first hour or two. There's just too much volatility. There's too much craziness, especially if it's related to the current pandemic we're in. Next question is one of many I've seen where it says with a $1,500 account, can I use 2 pairs? Is that still conservative? I do not think so. I would not be using 2 pairs in a $1,500 account. And certainly those 2 pairs, I would not have both of the JPY ring pairs we're talking about. The issue is most customers paying $189 normal. If we have the settings too conservative, they won't break even here. If they aren't even making money, then the cost of the software, they're not going to stay. Okay, Chris brings up a good point that a lot of people, including a couple of my friends had mentioned. I think it's a good point. And I'll just say this, okay, because maybe this isn't going to answer the question directly. Many discretionary traders, remember that means manual trading, many discretionary traders spend hundreds of dollars a month as their business. Now, I get it. Some people might not understand that. And if in fact they truly can't afford the $189 a month, what I tell everybody, including some of my friends that are first coming in, is go find 3 people. It's not that difficult to do. And I'm not Mr. Multi-level marketing, right? I come from a completely different space. But all the directors of this organization, a lot of our global directors, these guys are masters at what they do. Learn the business. Bring in 3 people. That will alleviate the cost of the software, depending on your situation. But if you just look outside of that example, you just focus on somebody that is a discretionary manual trader. They spend, on average, especially in the equity and future space, a lot of Forex that I know, where they don't have software that'll trade for them, they'll spend $500 or $600 a month bringing in data feeds, having news feeds set up. Obviously, the trading platforms cost, the charting softwares cost. There's a lot of costs associated with running that, and many of them, their costs will be over $1,000 a month. Now, I get it. You can't sort of do that in the beginning, but I would never tell anybody in a down or up line, oh, we'll just come in and we'll put the settings as something more aggressive so that the software can go out there and just kill it for you and it'll cover the costs of your monthly subscription. I would not do that, guys, because as we live by the sword with that, we will die by the sword of that. What if the performance is in drawdown for a month, right? We've seen it. It's pulled out, but we've seen it. And then, that argument just goes to hell. But it is a good question. Einstein has been running through news lately. Usually it stays stopped for news, but lately it just says trading, even though those folders are happening. I have set it to stop 45 minutes before, just like the settings I have here, so that's good. And 60 minutes after. It has stopped, happened multiple times, and has not only to me, I'll tell you what we can do, Clara. We can look into that further. I'll actually pull this question aside. I have weekly meetings now with developers. I have been told that we have some changes coming to that, but I have not seen that. But keep in mind that the software is, especially if you have trades on, those trades will stay on rolling through news. All right. Next question. Yeah, we're going to do that poll. Actually, let me pull that poll out right now. I'll do the poll while I'm reading through some questions. Thank you for that. Okay, here's the poll. So whatever you guys are doing, stop, look at this poll, read all the answers, choose one. And hey, you can have some fun with some of the other answers, guys, but you can always change your answers so that I can get a feel for where it is. So there is hundreds of people on this as attendees. I want to see 321 answers to this question, please. We could also have some fun with this, right? All right, so while you guys are going through the poll, let's do some more questions. How can we estimate during the week if we need to shut down auto trade? Number of pips and volatility, if so, any automated tool to keep track? There's tons of stuff out there, Juan. I think I think if you want, just you guys can ping me up on Telegram. I think we can probably get that enabled with some of these questions. We can have a little bit of research involved in answering that. But I try and talk on the weekends and certainly on Tuesday midweek review forecast about the volatility. I mean, there's going to be a lot of volatility. We're in a pandemic, for gosh sakes. Yes, by the way, Paul, this is similar to a martingale system where trades that are put on are successively larger in size. So essentially with the rule of thumb in terms of lot size, 0.01 per thousand, if I have a $4,000 account, would running 3 still be conservative as is below the rule of thumb? Yes. Can you confirm the recommended start day hour? So it's essentially Sunday night, 2 hours after the market opens, which is hour 23 here. So I'm getting pinged that the software doesn't always pause for news. Might be some disruption in the API with Forex Factory, something to take to the developers, which I have heard a few people say that, but I do know that that will be fixed with an update coming soon, because we're looking to make some changes to the trailing equity component if it's doable, to set it up per currency, which would be cool. It's one of the recommendations I made with developers. Also, just more clarification on how the software is operating if you're in trades through red folder news, or if you're flat. So stay tuned. We'll be able to verify that. Can you repeat how the equity protector works, please? All right, so doesn't look like everybody's participated in the poll. We have 100 people out there that haven't answered the poll question. What are you guys doing? Please look at the poll. Check it out. All right, so what was the question? Can you recommend to start it? Do that and repeat the so equity protector right here. If you're looking at the screen, make sure I'm sharing the right screen. Yes, equity protector. Get this out of the way. Equity protector is essentially set that in this particular case, the default out of the box setting is 60%. So the account can actually go through a 40% drawdown before it shuts down trading of any trades. Okay. You can change this number just by double clicking on it. All right, so we have all kinds of good questions coming in. Using the trailing equity start, say 3%, trail by 2 when it stops out in the week and you would like to get back into the market. So does the next time you start the software equity based on original equity or new equity? Also, does this reset the point for next week? It does not reset the point for next week, but what it does is for the current week. So these 2 buttons right here, so if you have trailing equity right here and your 2 triggers it, remember, 1 is the catch, so to speak, so it shuts itself off at 1%, it falls back to 1. You can actually click this button, reset equity protector. If you have the weekly goal, remember that's the other one here, or you have no protection, the fixed weekly goal, and you hit the weekly goal, in this case it's 3%, you can actually restart the weekly goal. Now just remember, if you do this, just like I mentioned last week, this is a much more aggressive stance. Why? Because if you have a certain return that's positive each year, that's funny, each week, and you reset it, what happens? It's going to start over again. So there's also the chance that you could lose the entire gain you had for the week, right? So until you have a very a good understanding how it works, or you've gone through a lot of these the Forex basics videos, which are actually really good, and understand how Forex works in general. Again, just getting back to my goal, really, especially if I was running money professionally for clients using this software, would be a 1% a goal week. That's it. All right. Okay, so for the questions coming in that are related to how to connect the accounts to FX Book, we have a video coming out on that. It's pretty involved. It was not shot by myself. It was shot by one of our experts. I have to get approval from compliance to post that video, so I'm going to work on that. As far as the equity protector questions coming in, just some other thoughts on that. I like it at 60%, but you could set it as high as 70. If you start getting into 80 or 90 and the account gets into drawdown, it's going to shut itself off. You're not going to have a chance for the software to pull itself back out, which has happened repeatedly over the last year. By the way, on a 100K account, I would not be at a 0.1 lot size. I see that question on a couple of these here. So I would probably be about 0.05 with 3 currencies, because that's still, that's still some pretty heavy hitting. Unless you truly can afford to lose that 100 grand account, then I would say go for it. 60% you can lose, just to clarify, yes. No, 60% is the account size. Again, equity protector here. 60% set. If the account drops 40%, it shuts itself off. I keep hearing that we need to be out of the markets by Thursday, but you just said it could take a month for the software to recover from drawdown. Can you reconcile those two statements? Well, I mean, even though it may take a month or 2 weeks or whatever the term is to draw out, and that was an extreme case last year when we had the Boris Johnson and Brexit stuff going on, all the currencies were going bananas related to Eurozone stuff. It took almost, a few weeks to pull out, but, it did. So why would you want the software running on Thursday or Friday when win rates are much lower? So it'd be best to just run Sunday through Wednesday, in my opinion. All right. So I would expect the markets to be, I know I haven't talked a lot about that, but I expect the markets to be volatile next week. Do you recommend one pair for 1,000? Do we leave the moderate settings? No, just keep the conservative settings on. If you have a $1,000 live account running one pair, I would not change that. By the way, let me show the poll here. Maybe you guys can, let me just end the poll. I'll share the results here. See, we can have some fun, right? So I would say 50% of the people, if this answer here was honest, almost 60%, if you add that, 60% of the people were either flat or made money, if I'm reading these results correctly. Right, so with the equity protector is set at 60%, the account has to drop 60% to get you out of the market. The Telegram group TradeWise, you get an invitation to it, just get a link. You prefer fixed weekly goal or trailing? So the fixed weekly goal is much more aggressive than trailing. So if you, and again, this just all boils down to, how important is this money to you, right? So if you can't afford to lose this money, I would say, why is it even in a live trading account? But if you can afford to lose it and you want to just go for a fixed weekly goal, that's good too. And by the way, take these questions, guys, and put them in the Q&A, not the webinar chat. Okay. So put them in the Q&A box, because we've got about 51 questions. I'm trying to peel through these here. On a 3-pair 100K account, would it be considered conservative? No. On a 3-pair 100K account, would a 0.1 lot size considered to be conservative. I don't think so. It would be 0.05 in my opinion, or 0.07. As the euro US dollar was going down last week, there were very few shorts, despite the indicators showing the market is very bearish. I'd have to take a deeper dive on that, Peter. I don't know. I'm just trying to answer questions related to not market questions. Yes, Adeze Duncan's course is readily available. From what I understand, it will be linked shortly from the Auvoria Prime back office dashboard. Right now, it is a separate website. If I set my goal 1%, what do I set the trailing equity for at $1,000 account? You could set the trailing equity at 0.5. So 1% is the, here, let me just go back to the screen here. Stop the poll here. We know the results. Close that out. So let's bring this. So there's a trailing equity. And your question is, if I set my goal 1%, what is the trailing equity for 1%? So if your question is, do I set the trailing equity trigger point or start to be 1%, I would trail by 0.5. Maybe you guys could get with your upline or downline, because I'm getting a lot of questions about the Telegram addresses for either Auvoria. I'll let you guys handle how to post that. 7% a week is realistic. You have to have some outside of the box settings, which I'm not going to go into because I still don't think we've gotten everybody completely comfortable and we're using and understanding the core conservative settings. So that'll be for a different. I follow the company settings in Einstein and always have to wait till Wednesday afternoon before getting out of drawdown. I'm unable to be in profit before then. Am I doing something wrong? Morrow, I would have to see what your settings are. And by the way, these aren't company settings in that question. You guys got to get away from that. So these are just settings that come from the software out of the box. Has nothing to do with the company. If anything, I'm the one recommending these settings, right? Not Auvoria. But the problem with that question is I don't know. There's so many variables in. When did you start it? Was it running all week? Does it have the exact same settings you have on the screen? So there's a lot of things related to that. All right, so I'm being told by compliance, let's go back and review the equity protector because maybe I've explained it incorrectly and created some confusion. So if it's set at 60%, just so we're all clarifying here, that means you lose 60% of the account. That's the net you're casting wide. It seemed to me this equity protector should be essentially protecting. Yeah, see, that's where the confusion of this, you guys, is. So, I mean, essentially, if the way I would read this, just not knowing the definition of it, would be that it's protecting 60% of the account, right? But I guess that's wrong. So the account can go down 60%, if I'm understanding this correctly. So that's a 60% drawdown, not 40. And, honestly, that is confusing. It really is. So it should be read a different way. Talk to the, yeah, that's exactly right. This should be called a loss protector. So I think maybe we can get that changed. All right, so can you explain the range? So, Michael, I'm not going to get into the range multiplier today. Let me look at the data a little better, see, because some of the changes I saw to the, this is the range multiplier here and the position multiplier. Some of the same changes I saw came from a huge data set on a whole bunch of currencies, and it had done much better with different settings. Weren't much different than what you see here, but I want to clarify that this is a good data set quality before I talk about maybe considering changing that. An 8K account, what's the maximum level and maximum lot that you would recommend? If this is an 8K live account that you're talking about, does changing the zone mean anything? What do you mean by zone? Don't know. On an 8K account, what maximum level and maximum lot size would you recommend? So going back to the screen, on an 8K account, three currency pairs with 0.02, 0.03, and 0.03 starting lot size. That's all posted in the back office of Auvoria. All right, so we're coming up on an hour here, guys. Let me just peel through these questions real quick. Bear with me a second. The individual that asked about the Aussie US dollar and the Aussie JPY, I would not recommend that at this point. I mean, that is a wackadoo currency, in my opinion. I'm going to talk about some of the other currencies a little further down the road. Loving the poll. A lot of people are loving the poll. That's funny. We'll show the poll more. I'm going to do different polls. Keep in mind, I really want to take everybody's temperature. But a lot of these questions, it doesn't look like you guys have gone through some of the notes we've posted on the weekly calls for this lot size. It's all in there. It's all in the back office, I promise. Take a look at it. Would it be possible to set trailing equity percentage in a negative? No. How do I get the alerts from Auvoria on my phone? Just download the Telegram channel. They have an app for your phone. Yeah, sorry about the equity protector, guys. I see my questions on that. I gotta tell you, that's really like, it's got me thinking the opposite. Is the software able to modify stop loss? During pause for news, is the software able to modify stop loss? Modify stop loss. Don't know the answer to that. Let me get back to you on that. What is a reasonable percentage expectation for a $10,000 account? Well, 1% a week. All right. Yeah, I'll tell you what, the next news week, let me just show that real quick. This is actually a good question. So much to pack in these hour meetings. So make sure when you download this or you click on this Forex Factory, which I would set as a bookmark, make sure you choose the right week. So if you're looking at this on Saturday, it's always going to show you the previous week. So just make sure you go forward to the next week so that you're seeing tomorrow, which is May 10th, starting Sunday. And then I just go in and filter real quick. Take out everything orange and yellow. Take out everything related to any other currency unless you trade those. I don't. So, but I leave in the British pound just because I want to see what's going on. So JPY, British pound, euro, US dollar, apply filter. You can see what's coming up next week. Now, Federal Reserve Chairman Powell speaks. So does the Bank of England's Bailey. Okay, two important individuals along with the European Central Bank and the Bank of Japan that are controlling monetary policy in the aggregate across this planet. They're both speaking next week. So, what do we do from a risk management standpoint in terms of the software? So, we know generally what the goal of the central banks are. We know that none of the chairs or any of the regional governors, for that matter, that speak outside of Chairman Powell, they're all on the same page. They all want the same thing. They've all communicated. So the answer to that is I don't expect to see any surprises coming out from any of the governors. Could be wrong, right? So if in fact that's the case and you guys are rolling into Tuesday night with, I don't know, 0.5%, 2%, anything higher than that, okay, especially if you've had an okay week this last week, or maybe you just haven't done that well generally, you have that profit, I'd probably turn the software on. Take a look at some of the other questions. Yeah, I kind of like this. So equity protector is really a stop loss for the whole account. Yeah, that's correct. So a lot of these questions looks like you guys don't understand how the software works. So Alexander is for everybody in the United States. Einstein's for everybody else outside of the United States, and that has a lot to do with the regulations as far as a company trading for an individual or a software that a company represents trading for an individual. They both operate in the same aspect. The difference is with Alexander, you have to approve the trades, which isn't really a big deal. So I would have the trades come into your phone. That way you don't have to chase down some tablet or laptop to approve the trades. Will reversing the range multiplier solve the problem with the drawdown, making it smaller than 1? Okay, I'm not going to get into that. Just keep those good. And I'll tell you, for anybody out there that's got large data sets on this range multiplier, Dominic, you know who you guys are out there, ping me on Telegram with your stats, because I'm going to try and include a large data set when I'm looking at this. Because I'm going to talk to the developers about this as well. So, I mean, the key thing is, back testing, forward testing, all that normal testing, looking at large data sets and being able to determine, is there some changes to be made to it? I've seen an exceptionally compelling case to making some changes for a more conservative than what the out of the box settings are default. When you say this, the software will turn off, you mean it will close all open trades? Yes. It's the equity trailing settings. What if some charts? Wait, you see, turn this off. I've already answered a lot of these questions. Can you tell the developers that your weekly goal, an equity protector, will not get triggered during stopped trading for news? Yeah, so I'll tell you, these are some pretty good questions, you guys. I love the insight here. This is helping me out. You guys could find a way to ping me on Telegram. That would be cool. I don't know how that happens. Maybe we can have some of our tech experts in the back office do that, but I'd really love to see these questions, because there's 95 questions that were posted. A lot of them are the same, but some of these ones are really good in terms of this stop trading for news, which seems to be an inordinate amount of questions surrounding this. So I'll have to clarify with the developers, which will be priority one, what actually is happening and what ideally do they want to happen with stopped trading for news. But just as I've mentioned before, the trailing equity and fixed goal being triggered when pause for news, that will be fixed as of the next release. So keep that in mind. Hopefully that'll alleviate some of the concerns here. All right, guys, coming up on 1 hour. Just double check these questions here. I'm still super confused with the starting lot size. If the rule of thumb is 0.01 per thousand, shouldn't someone be able to run 0.04 with a 4K account? Okay, so let me just quick share back to the screen. We'll end it there. And honestly, guys, it sounds like this is probably, for those that are confused, you need to print this page out. I really would. It's in the back office. Let me switch over to the other screen. And let me go back to our main one here. So hopefully you can see the screen. All we did between $1,000 to $3,000 starting accounts is we added another currency pair. We didn't change the starting lot size, right? So when you get to 4,000, I wouldn't change anything. I'd keep 3 pairs on, or 2. I mean, heck, if you really want the starting lot size to be larger, and I get that, it's like, hey, I need to make more money. I do get that. Then maybe just trade 2 pairs with a $4,000 account and put one of the pairs at a 0.02 starting lot size, like the euro US dollar. Why? Because it's maybe a little bit less volatile. Now, I say that and watch it'll probably go out and be way volatile next week. But that certainly may be something that you can do. Still stay conservative, right? Trade 2 pairs with a $4,000 account. 5,000 probably could do the same thing. The key thing is, at least right now, or depending on news, especially if the Bank of Japan's talking, you could pretty much guarantee yourself, if any of the governors are out there speaking from the BOJ, that it's going to be a more volatile week, right? So maybe you change your starting lot size down to 0.01, 2 pairs, or just trade 1 pair with a $4,000 account and have a 0.02 starting lot size. Does that make sense? So once you be able to understand how this works, you can sort of play around with that. But you notice I may be increasing lot size for a larger account, but I'm reducing the pairs that are traded, right? Increasing risk slightly on one side, reducing it in the other. That is a trade plan, folks. Please learn from that and build one for yourself. It is 11 a.m. Pacific time. And everybody, thanks for sticking with me through the problems with the equity protector. We will get that straightened out, including myself. And we'll go into more of the accounts and so forth here. But I want to thank everybody. See you guys Tuesday. We'll have the tech guys hopefully find some way for you guys to ping me questions in Telegram. I don't know how to do that. I would love to have somebody set that up for me so that I can get stats from people that have put lots of work into this. Flood me with your trade data, okay? Because then I'll be able to analyze all this stuff and come back with some more definitive setting changes if we're going to do that. But I can tell you there will not be any changes to the starting lot size or the amount of pairs to trade for smaller accounts. That's never going to change. What will change is taking a look at some of this data and maybe adding in a different currency pair that maybe shows considerable promise to take the place of that second pair, right? So with that being said, Steve Vetterl signing off. Be well.